today. First of all, can I do a check? Can you all hear me, please? I would love for this to be as interactive as possible. So please type any questions you have into the chat box. Is probably the easiest way to just communicate with me. So a couple of things I want to check. Can you hear me? Does the sound good? Can you see my screen, which should be the charting platform? And that's it from me for now. So just give me some feedback as we go, just so I know you can hear me. All right, so I'll go until I hear otherwise. So thank you very much for joining me today. What we're going to do, have a look. I'm actually going to do my market scan today with you for myself in real time. So I'm going to create a short list of markets that I want to focus on. I'm going to talk about where I'm looking for entries and why I'm looking for entries. So these will overlap. They should dovetail with your with the Wave Rider strategies. They should dovetail with that. They shouldn't be that. But what I want to talk about is the underlying price action. Thank you. So I've been on holiday for a week. I've come back, long drive, 8-hour drive yesterday. Then my sisters are out from overseas. We finished early in the morning, and then I head out this afternoon. So I'm glad that I got the opportunity to do this with you guys now. And so first of all, let's go through and have a look. I'm going to take you through the process of how I find tradable conditions. That's the best way to put it. What are the conditions that are most likely to provide the best results for my strategy? So I'm going to start with a couple of concepts, and also one of the questions that I would like to ask you is, have any of you attended any of my weekly review kind of weekly Sunday market updates? Have any of you attended them in the past? Okay. So let's start with this. I'm just going to draw some. I've got two screens, by the way. So if you see me looking away, it's because I'm looking at my screen. So I don't want to spend too much time on this. I want to spend more time going through the markets, but I do want to create sort of a bit of a loose concept. Okay. So any market, any time frame can only exist in one of two states. Okay, which is to say that it is either not trending, which means it's mixing up its highs and lows. So I'm describing the characteristics of a non-trending chart. Doesn't matter if this is on the 1 minute, doesn't matter if it's on the daily. I mean, it's relevant to us on the daily always, depending on sort of regardless of what time frame we're trading. Even if I am trading the 15-minute time frame, if my daily looks like this, it is problematic. All right. These are known as range-bound conditions. And the problem with range-bound conditions is that they actually have fewer people engaging in the markets. There's less money, less volume. The reason for this is that essentially most people have taken profits. The market's move, it's stagnant, so they don't really want to engage in it. So it's not attractive. It's only really attractive either to algos or to people who are already in the position and haven't exited a trade, or people who like to trade ranges. So trend traders or momentum traders will tend to get in above here or below here, and so they won't really be engaging in this if they can help it. And if you like to invest in just to give you some background behind me as well, what do I do? So first of all, I trade, it's actually better if I show you. So let me do this very quickly to kind of give you some, you don't know who I am, so you don't necessarily know anything about me. So let's go through to Forex Factory. Let's go and have a look at this. Let me sign in, and then it'll make a little bit more sense. I've got this new extra layer of security on my computer now. Let's have a look at this. So basically, in the mornings, I tend to be at my desk. So I concede that I'm speaking to you today from London in the United Kingdom, and I understand that some or all of you are in a completely different time zone. But I want you to kind of relate to the idea here. So first of all, I'm usually at my desk at about 7:15, and my goal is really to capture my first potential day trades on the 1 minute, the 5 minute, the 15 minute during this overlap session, which technically the same idea could be done here. the overlap creates a very nice boost in volume and activity. And in stocks, historically, traditionally, most of the moves happen in the opening and the closing hour. So it's just kind of taking advantage of that additional momentum. It doesn't mean that there will never be momentum between the sessions, but there should be extra momentum when the sessions overlap. And if I'm lucky, I'll get my trades there. So what am I looking for? I'm looking for 3-to-1 trend-based, price action-based trade setups. And if I hit my target, I don't really have a target. What I mean by that is, if a setup qualifies and meets the criteria, if it looks like a high probability setup, I will trade it. Okay. So if I see 3 setups and there's no red flags, I'll take 3 trades. If I see 6 setups, I'll take the 6 setups. But I don't really have to. The logic here is that as soon as I've had 1 or 2 winning trades, I don't need to trade after that. The probabilities, the more you trade, the probabilities are you'll get tired, the market conditions will change, you'll introduce the potential for a losing trade. You'll create room for it. Okay. Here's where it gets interesting. So then I can take a bit of a break until later on in this session here. Then we get the overlap of the New York opening up on top of the London session. So there's a second window where there's a boost of activity. And in between, the markets can possibly move or just potentially go sort of slow down a little bit, but they can also pick up pace here. And so usually I'm done. That's about anywhere from an hour to 90-minute session, another hour to 90-minute session. And what can often happen is I have other tasks I have to do. So I don't get to do the morning session, or I don't get to do the afternoon session. And sometimes I don't even get to do either. So usually what I will do is somewhere around 7 p.m. or closer to the New York close, when that daily candle is very close to closing, I'll look at the daily charts. And on the daily charts, I'll be looking for a setup. Okay. And I'll be looking, day trading is very powerful on currencies. It's beautiful. The reason is it's very liquid. Spreads are very tight. And not just that. Currencies can actually go in any direction. So you could, even if you have a strong uptrend, you might see a strong bearish setup. And that could turn out to be a very small correction within the bigger uptrend, but it could still be a high probability setup. Hope that makes sense to you. Whereas when you look at things such as commodities or indices especially, they tend to go up. So you probably want to lean towards finding bullish setups and ignoring the bearish setups. They're sort of lower probability. They still happen. The problem with indices, as soon as price tends to drop down to a lower level, the buyers come in, the bulls come in, which is why you always see a lot of wicks under the price action, which is what I'm going to show you. So so then I'll be looking at the daily setup, and the beauty of looking at the daily chart is it's binary. There's either a setup or there isn't. Okay, so it's very cool. And then I'll often take those setups as well. And then I also manage my own stocks portfolio, but that's very low maintenance. I'm only, you're only getting in and out of stocks every few months. So for example, now is a very good time for me. I'll be looking because it looks as though we're bottoming out. It looks as though we're really starting to break to new highs, and therefore we've had a weekly correction, which we'll talk about on the charts, which for me is very attractive. And so that gives you an explanation of kind of what I do. Now I'll show you on the charts. I'll go down and explain it a little bit further, but I wanted to give you a sense of routine. And the routine is very important. The routine tells me I'm in the right place at the right time, doing the right thing, looking for the right things. And if I don't see them, either it's because I'm just not feeling it, which can happen, or they're not there. All right. And because I'm there and I know that during that period, there are supposed to be setups, I don't feel like I'm missing stuff. Like I know there should be setups here. So if I'm not seeing it, then either I'm not in the right place to trade or they're not really there. And actually over time, you tend to be able to, you're not in the right frame of mind less often. Let me say that a different way. You tend to not have wobbles, emotional wobbles and psychological wobbles over time. You tend to get very good at getting yourself into the zone. And a big part of that, this is bizarre, is to relax. You can't force the market. So your job is to actually just observe the market to see what's going on. All right. It's very warm over here, by the way. So it's overcast, but it's boiling in the office. It's silly. Okay, so I was talking about how you could only have one of two types of market conditions, and it was either ranging or it's trending. Okay. Now, I tend to trade with the trend because one side tends to be in control, whether it's the buyers or the sellers, And actually those, relatively speaking, so when I use the words safe, I mean relatively speaking. Okay, the safest trading opportunities, in my personal opinion, are trading with the trend. It's higher probability. Am I still going to have losing trades? Yes, I am. Does that mean there were bad trades? No, it doesn't. Now, unfortunately, the only way to get to a place where you can recognize whether you did something foolish that was avoidable, or whether it was a good setup, or whether it was a bad setup, or whether it was something you could have avoided, or something that you couldn't have avoided, and that it was a good setup. The only way you can really get to do that is to gain experience. You need to take the trades. You need to take the trades. So you need to take a few hundred trades to be able to do that. And can I still have wobbles, emotional wobbles? Yeah, but it's rare. And also I've learned to get myself out of them. I've learned that you have these bizarre things. This is called, for some of you might not have heard of this, but it's called it's a very famous syndrome that pretty much everyone suffers from. It's called the imposter syndrome. You should YouTube it if you can. And it's basically, there's times when you think, I'm a fraud, I'm a fake, I don't know what I'm doing. If anyone finds out, and this could be in any career, it's not just trading related, it's in any career where you think like, why do they want to give me this job? And people struggle to promote themselves at work because they don't think they're even qualified for the stuff they do. The first thing you need to realize is that everybody suffers from the imposter syndrome. Maybe not all the time, but at times. It's just tied to self-confidence. And that you also have to know that self-confidence is something you have to build yourself. You mustn't expect other people to give it to you. It's something you must build in yourself. It must be a faith and a certain trust in your own abilities. And in order to build that up, you need to take trades. So you need to, and the thing with trading, and please remember this, is that trading is about doing a whole lot of things. Like you've got to have a lot of good habits. You've got to there's a lot of little things that you have to do really well. And there's a whole lot of silly things that you have to avoid doing. So good things would be making sure you're not too tired, making sure you keep your risk consistent, making sure that you stick to your strategy, all those kinds of little things. They're just this, like one day I'll compile as much of a comprehensive list as I can, and then I'll present it. Because it might be 50 things. I don't think it's hundreds of things, but it might be 100 things, So anyway, and then there's a list of things that you want to avoid doing. So you want to stop, you don't want to change your risk once you're in, you don't want to change strategies, you don't want to panic, you don't want to move your stop loss. There's all these things. And the painful thing, the annoying thing, the frustrating thing is that you have to not do anything in the one column and try to do everything in the other column. If you do everything in the one column and then you still do something in the other column, you can still skew the results. And that's a process. So don't be patient with yourself, be understanding. You have to be both understanding of yourself and disciplined, meaning you've got to keep yourself in line. The only way to move from not doing the one to doing the other is to repeatedly, consistently get yourself to do it, just to get yourself to do it. So it's baby steps. So I trade with a trend, I'm looking for setups, I'm looking for entries, and the entries are either a breakout or a pullback. That's it. So we're either looking for a pullback or a breakout. And I want to trade with a trend. These are the highest probabilities, safest kind of trading opportunities that I can do, that I can engage in. So when I run through the charts today, what I'm really going to be doing is I'm going to be sorting the charts into which ones will probably this week provide me with trending opportunities. Now, here's the only other thing I want to add to that, is that if you have a range and price breaks out of a range, it can start trending. So ranges are something to pay attention to insofar as they could become a brand new trend during the week. Okay. Everyone with me so far? Is this making sense? I'm not seeing any comments or anything. Let's just see if there's anything else here. I'm not seeing anything. Okay. All right. So let's go ahead and have a look at the charts. So the next thing as well is what's lovely about price action and what's beautiful about technical analysis is that you must understand that what we see in the charts are the physical orders that are going through to brokers, to institutions, into the market. And that's it. So there's no lies. Nobody can predict. If we're looking here and there's some big institution that has a big order that they want to trigger at this particular price in this area in the future. Nobody can predict that. First of all, because they probably won't tell anyone. Remember that the biggest institutions have to trade against each other. And the other thing is that I also want to remember this, is that big institutions, and I'll include Warren Buffett and Ray Dalio, Michael Burry or whatever, people that are managing billions, their problem, their difficulty is that they've got so much capital that they have to look for opportunities, either fewer opportunities that can handle that much capital, or they have to look for lots of little opportunities. Okay, so when it gets to currency markets, believe it or not, although it is the biggest, most liquid market in the world, so usually if you look at any of the top 27 currencies, any one of those is probably more liquid than the most liquid stock in the world. But the problem is that it's not bulletproof. If somebody wants to buy 30 million euro dollars and it's not leveraged, you'll see it move the market. Doesn't mean it'll move in a big way, but you will see an impact on the market. So here's the thing. Worrying about what's in the future that you can't predict is irrelevant to us. It's of no use to us. You can't do it. And actually, it doesn't impact your results the way you think. When we look at the markets, first of all, humans are creatures of habit. We tend to avoid doing the things that lose us money, tend to repeat doing the things that make us money. And as soon as we get into a crowd, which this is a marketplace, which is a crowded marketplace made up of millions of people at all different levels, we tend to actually do the same things. Now, you can really only buy or sell. You can pretty much only buy or sell in the markets. So that's kind of what's going on. And the markets can only exist in one of two conditions. So you get a limited number of things that the market can do. And it can't be random all the time. If it was random consistently all the time on every single time frame, well, first of all, that's impossible. The odds of that happening are just infinitely impossible. So what happens is it tends to fall into patterns. It tends to fall into patterns. Okay. So there's science behind this. It's self-evident. You can see it. So what we do with traders, and what we are as traders, is we look, what has the market been doing recently? Has it been behaving in a particular style? And all we do, and this is very important, what we are as traders, is we are looking, say for example, change my color. Say, for example, the market's been trending up. Okay, so it's trending up, pulls back, and the next big level's up here. So there was a level down here, we're talking big price levels, and the next big level's up there. And the trend is very nice and rhythmic. So it's a nice, calm, smooth trend, which tells you something. If the market's erratic, you'll see it in the behavior. If it's nice and smooth, that tells you something as well. And professional and seasoned traders and investors, do you think they've been doing this for a very long time? Do you think they want to put their money into more unpredictable markets or more predictable markets? Because I can tell you that over time, I have got better at identifying markets that are behaving very rational. And that's where I would put my money. I'm not going to waste my time on the junk. So most seasoned professionals who are successful will focus really on the best stuff. So the beauty about trends, they are not the same as a sideways market. These, ladies and gentlemen, although I said it can only be one or the other, you have to understand these are two different animals. They are not the same. In the way that I'm just going to use an analogy, in the way that this is a normal human being, and this would be a person who's a psychopath or somebody whose wiring is messed up. Then they're not normal. They're erratic, unpredictable, schizophrenic. They're actually not the same. And this is predictable. And trending markets attract predictable, rational, reasonable people. So trading is evidence-based. It's rational. It's logical. Okay. And so this attracts a different type of person than this. And it has a different personality. It is not the same person. If it was a person, it would be two different people, or it would be somebody who's got like a split personality. And you would avoid them when they're like this, and you would follow them when they're like this. So I want you to understand that when a market starts moving, it's self-reinforcing. It becomes very attractive to the rational, calm, better investors. So here's what happens. We've got space up to this next level. We've got a beautiful steady trend. So it's stable, it's calm, looks good. And we see a nice bullish candle set up here. And maybe it's set up off that old high. And maybe it's sitting on a pivot level. And maybe it's also sitting on a Fibonacci level. So what do we, and this is what we are as traders. Our job is not to say, what is this instrument going to be doing at this point in the future? Where will it be? Where's it going to be here? Where's it going to be here? That is not our job, because wherever it is in the future, if it's not trending and we're not sideways traders or range traders, we won't engage. And if it's going down, we'll be selling. And if it's going up, we'll be buying. So my question to you, or what I was going to say to you, is that as traders, our job is to look at the most recent behavior and predict. And this is really important. My wording is, I've chosen my wording carefully here, is to predict just and only the immediate next move of the markets. That's it. Just the next move. Not 10 moves down the line, just the next move. Once you accept that, once you get that. So basically, I was saying to my fiance on the drive yesterday that over time, to become, I believe that if you're training a newer trader, you need to instill a whole series of concepts into their brain. You need to root out the bad stuff. So you've got to put in the mind that it's logical, it's rational, it's evidence-based, that trends are certain things. So what I'm sort of miyagiing to you guys now, wax on, wax off, is I'm trying to drop a whole lot of concepts in here. Now, if I'm wrong, they won't add up to you between now and the next time I'm speaking to you guys. But if I have something, if what I'm saying makes sense to you, the market should start to make a little bit more sense to you. And that's what I want. So all we do as traders, we're looking for that next highest probability immediate move. Because there's a level up here and there's nothing in its way and it's behaving in a very calm fashion, and it's produced a really nice bullish candle, the most likely scenario for it is that it's going to attempt to move up to there. Does that guarantee that it will get up there? No, it doesn't guarantee it. It doesn't guarantee it, but 90 times out of 100, it's probably going to do that. And that's what you end up getting used to. You start getting used to the fact that you're identifying a setup where the market is almost setting it to go that way. So that's what I'm going to do when we go through the lists. So prepping all of you, trying to kind of make my case to you so you can see stuff. So let's start at the top. Let's go through, let's have a look at this. And I'm going to start with price action. So it's quite interesting because when we look at candlesticks, I'm going to do a little bit of a price action mini class here. We want to look, what is price action? Price action isn't just one candlestick. It is the context, the location of that candlestick in relation to major price levels. The most important thing on our chart, before charts even existed, before computers, before charts, you were working in the pits and you were looking at price. So you would see price go up and down. That's all you saw were numbers. And then traders worked out, and investors also worked out, that certain numbers became a bit of a ceiling, certain numbers became a bit of a floor. If price could break through that floor, then it would go lower. If it broke through the ceiling, it would go higher. Round numbers also tended to feature certain other things. And it is. I mean, you hear about it. Somebody will say, oh, well, the Dow's gone to 3,000, or it's gone to 3,500. So even today, we still do that. So then when we look at the chart, the first thing we want to do is determine price levels. That's what often happens. So here you can see a bit of a price level there. You can potentially see a little bit. I don't want to overdo it. I'm going to kind of put it there. And by the way, drawing in your levels is something that you will continue to do almost forever. Probably the only activity that maybe just me, but we never get 100% certain in, is where we put our support resistance levels. Sometimes we tweak it a bit. So don't worry about that. Your goal when you draw these levels in is to organize the information on the chart in a way that makes sense to you. That's all. Just in a way that makes sense to you. You're just organizing it into bands of price. That's all. If you're off by a few pips here or there, don't freak out. Put it in so that you go, okay, if price is there, that's where it makes sense. You want 2 or 3 above price where price is now, and 2 or 3 below that. That's all you want. You don't want to go crazy. Next up, price action. So what is price action doing in the last 2 or 3 candles, and then maybe the last, then look at the swing lows and swing highs. So price action isn't just price levels. It isn't just individual candlesticks. It's a sequence of candlesticks, and it's also how they behave at these major price levels. What are they doing currently? What have they been doing recently for the last 10 candles, maybe for the last 50, 60 candles? And then look at the swing lows and swing highs. So it's all of that. It's all of that together. So we're in a downtrend currently, euro dollar. We're in a downtrend. We had very bearish setups here. And the reason I'm showing you this without color is because we also need to look at the shape of the candlesticks. So when an experienced trader looks at a chart, they look at the shape, and then we look at the color. So the shape of these tells you a certain amount of information. And then whether it's green or red gives you an additional layer of information. Okay. So we can see we had a couple of bearish days on Friday. We're coming back down to this low. This is quite bearish. That was a strong level of support resistance where we are now. We've broken these lows. Let's have a look at it on a weekly perspective. On a weekly perspective, we're still technically in an uptrend. We're still producing a series of high lows and high highs. However, I do want you to keep in mind that these are very deep retracements. We had a big move up, deep retracement, deep retracement, deep retracement. And that's not really a sign of a strong trend. Strong trends will do 50% retracements or less. So this is not a super strong trend. And what I need to see this next week, this is a bearish candle. It's actually a bearish continuation candle. Why? Well, because this was bearish and this is also bearish. And you can see that what it's implying is and this is another thing I want you to think of, what is the next candle most likely to do? If these all red, and that's a very bearish candle, and it's an engulfing, almost engulfing bearish candle, what do you think the next single candle is most likely to do? Okay, it's probably 99 times out of 100 or 80 times out of 100, it's probably going to be a follow through on that. Because why? Well, because the next level's down here. So you've got a bit of a level here. I can see we've got a bit of a level there over here. And actually it's interesting because it's not a guarantee. So this is what I need to see this coming week. Do we break the low and carry on down? Or does it actually find support on this daily? Does that become a double bottom and go up? So that's what I'm going to be looking for. If we then move across and we look at GBP, it's a similar setup. It's a similar setup. We found some resistance in this area. Actually, it's interesting. I'll move it up here. It's very messy. This is very messy. And we're sort of coming back down to this area. So that is trying to decide what it's going to do. Aussie dollar. So the reason I'm doing this, that's also a bearish engulfing candle. And then we'll look at Kiwi dollar. And then we'll look at dollar Sing as well. Also very kind of bearish when you look at this. So what does this tell me? Well, when I see across the board that all the daily candles are bearish, it's the US dollar is the single component. Okay, so all of these, that appears as though Friday had a really strong finish for the US dollar. And therefore, Monday or Tuesday is likely to at least try and push through a little bit further. I want to keep an eye on these levels because we could push through and then have a rejection. We could actually be range bound, but that is what it now appears that it wants to do. So, and because of that, it doesn't mean, it's not a guarantee that this trend is in danger on the daily for euro dollar. It's not necessarily, this weekly trend, but I would say it's relatively important that we find out if we're going to get a bullish candle here. So if we do get a bullish candle here next week or a bullish candle here next week, we're likely to then continue up. So watching the lows of these candles is very important. Watching the low of that is because if we break it, the market is most of the time, 60 to 70% of the time, going to head lower. If it breaks the low of the weekly candles, and especially if it breaks the low of this one and breaks the low of that one, then it's likely to continue down. And that hints almost immediately that the dollar is continuing to rise. So if the dollar index, for example, would do that. So fine, so that gives me a sense of that. Let's look then at the other pairs. So let's go look at dollar yen. Okay, so dollar yen has finished up with a very nice strong bullish candle, sitting off a level of support and resistance. It's a nice little resistance there, very strong bullish candle, but it also has a resistance level right there. So I'm not in the clear yet. I think there's a good chance that it's going to push higher, but there's a problem here. So for me, for trading opportunities for this, I'd rather wait until we get past that, because once it breaks through that, then I think it's likely to continue up. And then you might hear murmurs of Bank of Japan intervening. So Paul, and actually probably most of my other colleagues here and teammates have probably lived through the Bank of Japan intervening. That goes back to 2010, 2011, 2012, around that period. And they will potentially do it. They won't always tell you on the day they're going to do it, but usually in the weeks or months running up to it, there'll be a lot of the Bank of Japan saying, we're going to intervene, giving you a heads up that they're going to do it. And when they start doing that, you want to not engage. You don't want to engage in that. You want to make sure that you stay away from those markets. So that's definitely something that you want to listen out for, okay, if that's going to be the case. But otherwise, you just keep trading until that time. They intervened at the bottom. So if you go back a long time ago and you look at it, they intervened at these points here because they didn't want it to go down. They intervened here. There's a couple of times they've intervened and spiked the market. So you do want to be aware that they do it. But for many of you, they haven't done it in the last 5 years, 6, 7 years. So it's almost like not an experience you've ever had. Then we have a look at dollar Swissy, and dollar Swissy, I just want to introduce that because I also want to talk about how that we've had similar stuff. So when you go look at this on a monthly period, the Swiss have also intervened historically in their stuff, and they've done the most atrocious things, big interventions here, interventions here. It usually happens with countries that are big in terms of exporting, and they tend, or importing, and there's usually a reason behind it. So they tend to want to make sure that they keep their exchange rate in a particular range. And there's a whole history behind these stuff, but they broke the market. They destroyed all the Swissy pairs, and it's only just started to come back in, which is funny because the Swiss are usually very savvy. And both times when they intervened, and the reason they had to intervene was all through just bizarre, like lack of intelligence, just really silly stuff. So they're not skilled in that sense. I wouldn't call them savvy in that sense. It's a personal opinion, but that was it. So that's your kind of your black swans, kind of your gray swans are things like intervention, which you will normally hear about. They broadcast it before they do it, but then on the day they do it, they don't tell you. So it's coming in the next few weeks or whatever. And I only bring that up because you might hear Bank of Japan do it a year from now, and I want you to just remember that. Okay, so let's go through. So what are we seeing if we go and have a look at the Swissy? We're seeing that. What does that price action look to you? What does that look to you? To me, that looks bullish. We're in an uptrend, nice level of support. We're pushing up. We finished with a strong bullish candle, and I think we've got another level here. So for me, dollar Swissy is looking nice and bullish. So I bring it up because some of these charts are trending already, and if the setups mean that they're like this is already trending higher, I think there's a high probability it's going to continue up this coming week. Okay. And then we have a look at something like dollar CAD. Now I'm going to keep an eye on the time. I want to wrap up in the next, let's say 10 minutes. I want to work my way through all of these. Let's have a look at dollar Sing. Okay. We've got, where did I do it? Where am I put it? Where did I do it? Let me just check my symbols quickly. Okay, so this is slightly different. We've got a little bit of a range here, very bullish candle. All of this is hinting at that it's going to push high. All the charts are hinting at that's the most likely thing the market is going to do in the first half of the week, if nothing else. But there's also some exhaustion here. So this is an area that I would pay attention to. Just pay attention to how price reacts there. So I think we're going to see a smaller move, which could be a few hundred pips. We'll see how that goes. And all that really means is just being aware of it. So it means that if I, making sure my stop loss and my risk is all appropriate to what we see here. Now that we've done that, let's go and have a look at a few of the other markets as well. And if there's something specifically you'd like me to have a look at, just let me know. So let's get rid of these ones here, get rid of this stuff here. Let's just get rid of these things here. Okay, and let's have a look at gold. So gold, I'm just going to highlight this now. So this pattern, and I'm going to say this again, the trading is about doing the simple things really well. And we laugh at things like the first things you hear about before you even do a course. You hear about head and shoulder patterns, double bottoms, triple bottoms, cup and handle, bear flags, bull flags. And really, they're just descriptions, they're patterns of what price action is doing. So a head and shoulder pattern is a change in trend from an uptrend to a downtrend. That's all it is. But it has a very high success rate of probability. It's not very sexy, but it makes money. You have like an 83% chance of making money if you trade a head and shoulders. And you get double bottoms. So here's the thing, the reason I'm bringing it up. When you get a double bottom after a downtrend, it's usually a potential change in direction from a downtrend to an uptrend. It's a bullish setup, but you can get double bottoms in an uptrend. So you can have price done this, come like this, do a double bottom like that and go. But most people don't see that because like you're thinking double bottoms happen at the end of downtrends, you don't see it in uptrend. So this is a double bottom. This is a double bottom, okay. It's a bullish setup within an uptrend. Okay. This, if you merge these two candles together, you'll get a rejection candle like that. It's a double bottom. It's going to try to break above that high. And if it breaks above that high, it's got to battle with this. So gold is definitely dealing with some stuff, but that is a double bottom on the weekly. So this week, I'll be looking for gold to head higher. That's where I think it's most likely to go. You can see it's sitting at a little bit of a level here. I think if we can break, and it's struggling a bit with that area, but if we can break through, so in other words, if I see price break above that, then it's very reasonable to expect it to go higher. What it could do as an alternative before it goes higher is potentially come back down here. So back down here, boom, test a fib level, test a pivot level, and then continue up. But right now, the momentum for gold appears to be to the upside, and it almost certainly looks the same for silver. When you look at silver, silver is even more bullish than gold. I thought I had all my symbols up, guys. Sorry about this. Silver to me looks especially bullish here. Okay, it's a little bit more range bound, so I'll watch that a bit. A little bit of a failure in this area, but again, I still think it's more bullish than bearish. Okay, there's your double bottom. Go down to that daily. I'll be looking for price to potentially turn around this week. So bullish setups for me, that if, for example, I find one, let's just say that candle comes down to this area and produces a bullish candle here, I would see that, funny enough, as a break and a retest and a double bottom and a continuation. Okay, so I'll be looking for that. These are the most likely things to happen. Okay, if they don't happen, they don't happen, but they're most likely to happen. Then we look at crude oil. So we go look at crude oil. Crude oil's phenomenal, super, super bullish. Is it overextended? That's really my only concern. I know which way it's going. The only problem is it overextended? I'm not going to get in now anyway because it's overextended. And here you can see it's almost gone parabolic. Look at this 4-hour chart. Look at the 1-hour chart. It's very, it's gone. It's very parabolic. Okay, so one of the things I do is I tend to put moving averages on, just the 10 and 20. Just the 10 and 20, or even here I'll use the 20 and the 50. But the 20 gives me a really good indication of where price should be when it's not overextended. So it should come back down to here. So I can tell it's overextended there. I look at the 1 hour, it's far away from the 20. I look at the 4 hour, it's really far away. It's gone parabolic. So it's very much, when it corrects, it is very likely. So when the markets do this, they are very likely to have a strong correction. So they'll usually have a bigger correction. So they go like this, and then they have a stronger correction back in line with that original kind of angle. So back in line with that, they'll probably come back into this. Okay. And the first clue will be a very strong series of red candles that will probably come back down. Okay. And it makes sense. If gold's going to potentially come back down a bit, find support, and then go, silver could have a very nice strong correction. It's very bullish, but I think it's overdue for that kind of correction. So silver's problematic. It needs to come back. There's also possible it might come back to that level. How does that match up? Yeah, you see, that's potentially it. And Monday would be a great day for it to have that correction and then continue up throughout the rest of the week. What does it look like on the weekly? It's just broken through this. So silver has just managed to break through out of this range. Excuse me. It's got some good room to run. Silver is possibly more attractive than gold. It's lagging. It's got a lot further to go, and it's just managed to break out here. So possibly silver is actually more attractive than gold because it has more room to run. You can see gold is already near the highs, and it's already struggling with a lot of exhaustion. So I hope that makes sense. Then let's go to, crude oil. I beg your pardon. So crude oil, what are we on now? Yeah, crude oil. I beg your pardon. Sorry, crude oil is more attractive to me than the metals for now because of that exact reason. And that's Brent. So Brent as well. They're also just broken through, beautiful pullback, weekly chart, just managing up. It's got some good room to run. So I think that'll be it. Sorry about that. How about Aussie dollar, US dollar? Apologies. Let's go have a look at that. So Aussie dollar, okay. So when we look at it from a weekly perspective, let's just put in a couple of levels here. Don't worry about them too much. Let's put them in there. Okay, we've broken through this. Technically, we're in a downtrend. Lower high, lower low. Not a very strong downtrend, but you can see we're below that. I would like to see a pullback and a retest, which you might count as this. So it might actually count that as a potential retest. We see a bit of a wick here and a bit of a wick here, which means if it's going to continue down, it'll be a break of that low. So I think this is a potential setup here. So we've got, although you are technically in an uptrend on the daily, what it's actually done, let's be real, is the weekly has pulled back into this area. You've got a failure here, and a bearish momentum candle here. To me, the most likely thing that this is going to do is continue down. I'm a little bit concerned about this level here. There's something really weird going on here. But yeah, that is a very bearish setup within a bearish picture. So I think this is going to try and turn around right now, possibly, and continue down. I want to see what happens there, but I think a high probability. So how would I trade this as a day trader? Just as an example, I've got my 4 hours set up. So there's my consolidation and a momentum candle that breaks out. I would be looking for a little bit of an entry around about here, probably. Let's just change this setup here, make it a little bit skinnier. Change the color a little bit to lighter blue. Do this. I'd be looking for setup, probably 15-minute, right down to the 15-minute. There's the blue line. And I'd be looking for breaks and retest continuation to the downside there. So especially if we break below that low, then the momentum will probably pick up, because then you're breaking your weekly candle low and your daily and everything. Then more people will start to get in. So the traders will wait for different signals before they get in, which is like a snowball that gains people's perception. So that to me is a high probability kind of direction for that. It is an uptrend here, but that's a very bearish, almost engulfing candle. It's not engulfing here. The failures over here, the wick failures, it's battle with that. And this is usually a bit of a momentum candle, meaning it's actually moved and made a commitment out of here. It's a bit of a failure. So follow through that would be a confirmation of that setup. Then we have, because I want to wrap up. Sorry, guys, I'm very conscious of the time. Let's have a look at the indices. So the weekly candles are also very important here. We're looking at the Dow, which came back into this level, produced a swing low. It's a bullish candle, failed a little bit here, but that's not a significant thing in my opinion. I think there's a good probability, especially if we break the high, it's going to push up to that one. So I'm looking for that. The S&P 500, very nice confirmed swing low. It's a pretty good, decent body candle. That is bullish. So I expect them to continue higher. So breaks of the weekly high would be significant. So if you draw a bit of a level there and then go to the daily, you kind of know. So even if you pull back here and then carry on up, a little bit of a wick failure here. But if you do pull back into this area and produce a bullish candle, it's an uptrend. That would be a setup for me, and we should continue to break through that. We should. The tech stocks weekly also bullish. Very nice. We've got a nice retracement, big move up, nice retracement. I would have preferred a deeper correction, but if the markets are bullish, they'll do a shallower retracement. So I'm reverse engineering that. If it's a shallow retracement, the markets could be very bullish. Okay, that will be the case, not 100 times out of 100, but it'll be the case most of the time. The look at the FTSE. You could argue that's a double bottom. So that looks good. Nice and bullish. Hong Kong. Okay, this is a tricky one because we broke through this level of support and we're failing a bit here. So this week, if I see a break above that high and we close back up above here, great. But this is not a strong bull market. It's not a bullish index. I wouldn't trade it to the upside. In fact, I wouldn't trade it at all just yet. Germany is range bound. The DAX is range bound, but it did bounce off the bottom. You can see it has found a bit of support in this area. That's cool. And then you've got the ASX in Australia. Very messy, but overall actually more bullish than bearish. More bullish than bearish. Very nice bullish candle there. Next target, most likely back up to there. So I think that looks really good. Overall, it's more bullish. And once it gets free of this kind of clutter, it'll start to pick up and take off. So ladies and gents, that's it. I'm going to leave it at that. Lastly, we'll just quickly show you the yen pairs. So I was quite a fan of some of these yen pairs where I was looking for their continuations, but they're really battling. So I'm passing on those at the moment. Any of the cross pairs, Euro Aussie looks good. Pullbacks into these levels would potentially be looking good. So they might come back down a little bit lower. Pound yen, it's very messy. So the trends that were here have gone sideways. So this has now become an unpredictable market. Where I was a fan of the yen pairs, I'm not now. Singapore, that's a nice potential setup, but the other pairs might be a bit problematic. And then you had Swissy yen, which was the other one that was very nice and bullish. Also a nice little setup of support. So there's some potential for it to go back up to the top of the range at the very least. I like that. Yeah, otherwise, I've got to wait for breaks of some of these levels. Pound Aussie failed. That was a failure, which means this is now range bound, which means it's possibly going to have a deeper correction before going long. So I'm a little bit more cautious on some of the cross pairs. Excuse me, some of the cross pairs there. I think the majors might actually have better opportunities straight out the gate. I think crude oil is looking fantastic. It's a bit overextended, but I think it looks good. Keep an eye on silver, keep an eye on gold on those areas. And the indices, for the most part, look bullish. So I would be looking for opportunities on the strongest of the bullish indices. And that's it. That's it from me. I can stop sweating and annoying you guys with all of that. But that is it from me. Are there any other questions, guys? Any other questions to do with this? Did you find this valuable? Do you find it instructive and useful? Because my goal here is also to just contribute to your overall technical analysis. To get the simple stuff, the foundation stuff, build up your confidence. Okay, I want you to trust price action, but I also, sometimes something small that I say might actually be significant to someone who's listening. They're like, oh, that's interesting that, like, for example, I go, oh, okay, well, there's a failure here. That was a very nice bullish candle and then it failed. That might be significant to you, but that's my goal. Okay, well, thank you very much. Sam, I'm going to exit this. I'm going to end it, and I'm going to leave that up to you, but thank you very much. And I really enjoyed it. So thank you. Thank you, guys. And I will see you in the next one. Okay, so thank you.